right. So it's great having you guys here today. Let's chat about landlords, right? Because I think landlords are having a rough year so far. I don't know about your area because obviously this is all regional, but I know in our area, rents are going down. The demand is much lower. As a small landlord myself, I mean, normally I have people fighting over who's going to rent my unit. And now I keep showing it and lowering the price and showing it and lowering the price. And, I'm competing against a lot of these new units that were delivered to the market. So I didn't know if that's what you're seeing in your areas that you guys invest in at all.
We did have one unit duplex that we have in Florida take a lot longer to rent than normal. But overall, I mean, we have over 80,000 members at Real Wealth, so we get a lot of feedback on how people are doing. And we really haven't heard very many complaints of rents coming in less than what was expected. And maybe that's because a lot of what we promote and sell at Real Wealth is newer supply that's competing with the older supply.
That's what's doing really well is the new stuff.
Yeah.
Because they can do those buy downs,
Well, that's the thing. I mean, we negotiate with the builders who have been stressed.
Yeah.
Real estate is always about solving a problem, and that creates an opportunity. And the opportunity is to go to these builders, solve their problem, get the inventory off their books. They can't hold it. They can't sit there with properties. So we've been able to negotiate that, we have so many investors who would buy these if they would just lower the interest rate, and they buy it down in some cases to 3%.
Yeah.
Is that a permanent buy down or is it temporary?
It just depends, though. Sometimes it's a 30-year fix, but it adjusts at 10 years. But
The cap.
at 10 years, within the next 10 years, hopefully you can find a time to refinance.
That's something that a normal person just listing a home is not be able to do.
No, because it's expensive. But a builder, they're thinking differently. They've got to move inventory, and they just can't sit on it. And they also don't want to lower prices like a homeowner might, because that just ruins their comps.
Yep.
If they've got 50 homes to sell and they just sold you one at a discount, well, the rest of them are at a discount. So they'd rather do behind the scenes, which is often in upgrades or like a bigger lot or whatever. In this case, we say, no, just put that difference towards buying down the note, or just buying down the rate, making it cash flow for us.
Or free property management is another thing.
That's a big one. I know, like they do it with cars, what's the nicest car I can get with the payment I can afford?
Right. Yeah.
Same thing with a house, right?
Mm-hmm.
Yep. What's the biggest and the nicest, the newest house I can get for the payment I can afford? It's like everybody solves to that payment.
Yeah.
Yeah. And you're right. As far as, you guys are competing with, because, my units are probably class B, they're dated. They could use a little fixer up. But even if I were to fix them up a little, I'm still not competing with new construction. It's not going to be worth it for me at this point,
Yeah.
So that is interesting with all the new class A's coming to the market. But where do you guys see just the market in general going in 2025? And is there any specific areas that you're focusing on?
Well, there are a lot of challenges today, and 2025 is just one of those years where people need to be really sharp with their pencil. As you know, we have insurance rates going up, the cost to repair or the cost to build is going up, cash flow is going down. Where we invest, we haven't really seen rents go down so much, but that's always a possibility if indeed Trump sticks to his mass deportation that he's been talking about. That's what I was mentioning earlier, is less demand. And we know that we don't really know how many people came into the country, but I've heard anywhere between 3 million and 10 million. Well, depending on how many people leave, well, that's a huge amount of people that no longer need a place to live. So it's good. It's good for potentially if rents come down, that's really good for renters. It's tough on landlords. So you just got to be aware of a lot of things. If we see a lot of government layoffs, you don't probably want to hold property where a lot of people are losing government jobs.
Yeah, we're seeing that in Washington, D.C.
Yeah, you're seeing it in D.C. already and some other submarkets. But it's hard, too, because our costs went up, too, right? So it's almost like we had this big boost in rent, and everyone looks at us like, yeah, rents went up so much. You guys are fine if they come down a little. But the problem is our expenses went up a lot. I mean, my HOAs on my properties, it went from $250 to $350. Handyman went from like $35 an hour to $60 an hour. So, these are huge increases for, on the expense side.
Yeah.
There was a study by Bankrate that came out like about a month ago that said that the average cost to operate a home was about $18,000 for the year.
For the year.
Wow.
for the year. Now, of course, those aren't California property
Well,
companies,
let's not even talk
you know,
about
or California insurance, but that was an interesting study.
Yeah.
And you know, that's not the mortgage at all, right? So you just figure it's about $1,500 a month. Are you guys seeing the operating costs jump a lot throughout your portfolio?
Again, we help kind of newer investors, busy people, professionals, doctors, lawyers, people that just have a career. They don't have time to go buy an older home and fix it up. They don't have the time to do it themselves.
Yeah.
They just need something simple, new. That's what we focus on. So no, we're not really seeing issues with repairs because there's not a lot of repairs that need to be done. We do have a build to rent community that we're syndicating right now, but we work with a partner who's able to keep those costs down because he doesn't hire subs. He has them in house.
I'm getting crushed. My insurance went up $1 million. And my property taxes are chipping away, right? Because they're all at their places. And then, of course, our payroll's up on all the components, stuff that we buy is up. It's paint's up, flooring's up.
It's a different animal, though. You got big, huge grill. I have an animal.
Yeah.
And it's got a little mouse.
Like funny. I hope so. Because,
right.
But it's actually been good because I think we've been a little lazy too. Like.
You have to tighten it up.
You sign an agreement, and then all of a sudden it's a lot higher, and forces you to go back. And we just hired a full-time director of procurement to look at all our contracts, renegotiate them all, and just try to get our operating costs back to the where they were just a few years ago. But it's a lot higher.
But I am wondering though, like on the expense side, I mean, not really property tax and probably not insurance, but just on more of the maintenance side, if because there may be less demand with less people being able to afford to do work, if those costs start to maybe come down. I mean, I don't know if that's a pipe dream or maybe, when I know with our handymen that we use, like they got busy and they got cocky and they weren't responding. And you know what I mean? Yeah. So then we had to find different ones. And, and now it seems like anyone I text is like, yeah, I can be there in like a day or two, So I'm wondering if the price, adjusts
for sure.
But I start to come with that. Yeah.
I hope so. But really one of the biggest issues, and we're certainly seeing it in California, and usually what starts in California spreads, and we know it is of course the fires.
Yeah.
And we're, 10 minutes from those fires. We don't know if we have insurance right now because we're with the California Fair Plan, which is the only last remaining kind of government-backed insurance.
Now, how much, because of all this insurance stuff, and I know you guys do invest heavily in Florida, like when you make rent, decisions on what to buy for an investment, how much is insurance weighing in your decision at this point?
The insurance also dictates what kind of property, because a new property in Florida, the insurance is much lower than the older properties because it's all hurricane proof, not hurricane proof, but resistant, I guess. Sure. So it's like structure. Yeah, like the properties we have in Florida, our insurance hasn't gone up barely at all, and it's normal, like normal insurance costs. But if you get something that's rehabbed and it's from back in the 40s or 50s or something like that,
that's very interesting.
Yeah. So a lot of times we'll look at that, and we also obviously look at flood zones.
Yeah,
we don't do any investing in flood zones. So.
Yeah, one of our former employees had just bought a brand new home in Fort Myers right before that huge hurricane that just wiped out Fort Myers. And we were so worried about him. And all that happened was his windows broke. So whatever it is they're doing with the new construction is really holding up well. I think the insurance companies know that.
We were watching some show and they were talking about fireproofing a home, and what they had designed wasn't that attractive. Yeah. But then, do you care if your home's not going to burn down? You know what I mean? Like, if you get to be where you want, and I'm sure there's ways they can do it a little nicer, but...
Our house is pretty much, fireproof. It's all metal roof, stucco, glass. That's it. There's zero wood.
Firefighters came to our property and looked around. They're like, you're really in good shape for that reason. There's things that people are learning of what you can do and what you shouldn't do. You shouldn't store flammables under your house in the basement, which is what people do. Yeah. You're going to put all this flammable stuff there. Don't do that. That's how a lot of homes have burned in our neighborhood.
The demand for rental properties, how do you see that going in the next few years? Because we've added a lot of supply, and that's why in certain markets, the prices are stabilizing or going down a little bit. But, homes are still really expensive. So I'm just wondering what you guys think the demand for rentals is going to be.
It just depends on the rental. I mean, you're more in the multifamily world. We're in the single family world. It's just a different tenant, right?
We're getting clobbered in multifamily.
and we're kind of not in single family. So in fact, we kind of saw rents go up when multifamily rents were going down. I think a lot of the mass deportation that Trump's talking about will affect apartments, where people were, and not necessarily homes. So, we're not feeling it yet. And there is still a shortage of single family homes based on versus demand. So we think that demand will stay strong. That's why we're doing a build to rent community right now. You would think, well, that's a crazy thing to do right now, but the demand is there. It's also market specific, right? We're doing that in one of the top 10 fastest growing zip codes in the country. So we expect, and we're also seeing that there's not a lot of other build to rent communities going on because there's fear in the air and so forth. So when this is done in a couple of years is when we expect there'll be even a worse problem in terms of lack of supply.
And just for clarification, that's basically a neighborhood.
Yeah, it's like an apartment that's horizontal. So
single level, just for people. Yeah, we've done them, and it's kind of the wave. It's here to stay too. I think the one thing to note is there were almost 1 million units delivered, right, for multifamily between the last couple of years that hit the market, and it's the highest in 50 years. So that's why we're seeing the disruption on the rent side. So it's kind of moving through the pipe down, but it is getting absorbed.
And it was like you're saying about the car thing. How much car can I afford? So people look at that and they say, well, how much house can I afford to buy, and how much house can I afford to rent? And there's a lot of people, the majority of people are stock market investors, right?
Yeah.
Not real estate investors. So they look at, okay, I can get this, I'll pay this for rent, and then I can invest. Whereas if they bought a house, they're like, I don't have any money left over to.
It's a massive market, that build to rent, because there's nobody above you, and you have a little yard if you have a pet. There's all kinds of advantages over what I do, which is 2- and 3-story apartments.
And what I love about the construction of build to rent communities is we don't have to build the whole apartment. We can build a portion of the neighborhood.
Yeah, phases. Yeah,
rent it out, build the next section, and then when we sell, we intend to sell it to an institutional buyer, and Wall Street company. But if we don't, we can still sell them one off. So it just gives us a little bit more flexibility.
Yeah, there's a lot of options there.
So let's talk about a housing crash, right? Because I feel like every YouTube video I watch, even the news now is hopping on it to get clicks. There's going to be a housing crash, right? But we've been hearing that for years. So do you think that, many years. And honestly, people can keep saying something and eventually maybe they'll be right. But are you anticipating any kind of housing crash?
And there are definitely some parts of the country where prices are going down, and it's, again, market specific. But when you really look at the statistics, 40%, remember the baby boomers are the second largest generation today, and the youngest are 60. So they're age 60 to 80. They probably, they hopefully have paid their homes off during their lifetime. So you have 40% of homes today paid off. They don't even have a loan. So the only stress they're dealing with is insurance going up and property taxes going up, but they don't have the mortgage to deal with.
Or 3% mortgage.
And then you've got a massive majority of people on 2%, 3%, and 4% interest rates. So their payment compared to income is the lowest ever. When you look at debt to income ratio, how much are people spending on housing? It's horrible today if you're getting in the market today. If you already own and you're in those low interest rates, you've never been in a better situation. Your payment to income and wages have gone up over the last few years. You've been seeing your wages go up. You are seeing your equity go up because prices have gone up. Home prices have gone up every year. So the average homeowner is sitting on an enormous amount of equity, a low payment, and they're in the best position. They're on the party bus. And people trying to get on that party bus today are struggling. They're chasing after it, and it's going to be hard.
And I think you got to define, what a crash is. I think that's important because we've been through a crash. 08, 9, 10, 11. I know what a crash is. A crash is when there's a lot of defaults, and there's not. A crash is when there's a lot of stuff going back to the bank, and there's not. A crash, yeah, right. There's a crash is when there's a lot of supply of something, and the price goes down a lot, and that's not happening. So, I think the people who are saying there's a crash are the people that they had a renter, immediately, and now they have to wait a month. You know what I mean? Like to
Spoiled
them,
investor.
they're spoiled investors. It's saying, "Oh, there's a crash." There's no crash. It's not even close.
Yeah.
There are markets that are softening for a while, and there are the other thing I do like about this disruption right now is it's exposing the bad landlords. It's exposing the bad property managers and the people that aren't, that probably should have never been in the business. And I mean, what I mean by that is the market saves people, and it has over the last 5-6 years saved a lot of people, and now it's just exposing them. And so then they're saying, "Oh, it's a crash," but I completely disagree with it.
Mm. So the YouTubers and everything, what are they saying is going to cost the crash, or are they just?
Well, here's what I think part of it is, right? So, I'm in real estate, I'm a realtor. And, when you look at properties, sellers can list a property for whatever they want, right? So, you watch them list it way too high, and then you watch them drop it and drop it and drop it. And these realtors aren't necessarily experienced either because, in 2020, 2021, 2022, you could kind of list it for what you wanted and you could get it, right? As long as it wasn't too ridiculous.
Yep.
So now, I think these sellers are just going really high, and then you're watching them slash. So to the average person, oh my God, this house went down 20% that was listed, and now it's like, what fire sale? Well, no, probably that 20% is about where it should be and where it should have always been. And I was telling Ken, I'm listing one of my condos right now because I want to move it to single family for all the reasons we just talked about. And, the last home the last 2-bedroom in my community that sold for $340 a year ago. Nothing sold for a year. There's a bunch listed. There's like 5 listed. They're all at $404, $387, $360. Yeah. Now they're redone, but I'm like, this is insane because nothing sold for that. So if you were just watching from the outside, you would say, oh my gosh, they had to sell it, lower it all the way to $330 or $340 to sell it. Well, that's what it was a year ago. That's all it's ever sold.
What happened was they bought it at $325 or $330, and then they thought they were going to do a value add.
Yeah.
And they're stuck.
Oh,
that's probably
they put too much money in.
For sure on the 404 is what that is because he bought it and he wanted to, for a snowbird, fully redo it. But you just, the value is just not there and it's never been there. So I think that what's important when you're looking for those listening is look at what things have sold for, not what they've listed for, and then see what things are selling for now. And then you can calculate how much prices have went down. And we're seeing a little softening. What we're seeing more is seller concessions more than lowering of prices or people just taking it off the market. Like it's not selling. I have a 3% interest rate. I'm just going to rent it, So we're seeing a lot of that too. But to your
Short-term rental it too.
Well,
a lot of people.
But prices haven't gone down. If somebody lists something high and doesn't get it, is that really a prices going down?
No.
You know what I mean? Because, you know what I mean? Well,
the other thing.
Brings the media.
Yeah, exactly.
New York Times does a story on that.
Correct. The other thing that people aren't realizing, though, is in 2008, they had 0% down mortgages, right? So people had nothing, right? So, you own a $400,000 house, you've put nothing down, you've just made payments for a year. You're not really out if you just walk away and you rented it, right? But now, the banks have been more stringent with these loans. So not only were they lower percentages, but a lot of people put like 10% down or 8% down or 15% down or 20% down. And so to walk away from that is significant, right? You're basically losing money. And if you have a low interest rate, it's going to be more expensive almost to pay rent than it is to just stay there. So I'm not seeing the urgency of this crash. I do think certain areas, like maybe in Florida with the hurricane insurance or in California with the insurance, they could not promote a crash, but you could have an additional amount of listings that could maybe affect the prices a little bit. But I'm just not seeing this urgency. Like I have to get out of here. I can't make next month's payment. We're just not seeing it.
Yeah, you can't have a housing crash if you don't have distress.
Right.
Yeah.
So that's how it works. If people can't make their payment, even if they put $100,000 down on a property, and then they can't make the payment, they lose the house. But today, let's say you lose your job, you just put it on the market.
Right.
You sell it.
And they have lots of equity.
Yeah, you don't have
that's
to wait for it to get foreclosed because you don't make a payment. You just sell it.
In '08, nobody had equity. That's the difference.
That's the
now there's a massive amount of equity. Yeah.
But I guess if more, because right now, we are seeing more listings than we have in the past few years. But, so I
But
guess
really,
that
we're
could
still at
go up.
50 or 60% of normal? I mean, it's still way below the normal 6-month days on market.
And that's why people who fall for these basically is clickbait, right? That's the only reason someone's going to say there's a crash, or else they're just not they don't understand data.
Yeah, but it does affect buyers because, when I work with buyers, they're like, well, we want to wait for the crash, or we're waiting for the correction, or we don't want to buy it and then it go down. And it's like, well, you need to do a little research, because in 2008, when things did crash, unless you had cash, good luck getting a loan.
Yeah,
So it's not like as easy to get lending either. So
I love it though. As far as I'm concerned, they can wait. I mean, we don't need more buyers. Right? Like, who wants that? Like, let them wait. Let them watch that stuff and let them wait.
So this market, though, is trickier than it has been the past decade, right? Because in the past decade, you buy something and appreciate it, rents were continuing to go up. It's been a pretty easy decade to invest in real estate. So for people getting in now, or maybe they're already in and they're newer, what kind of advice would you give them?
I think it is really going back to basics and not expecting you can retire this whole, FIRE thing, be able to retire by the time you're 30. That's just, sure, that's possible if you find great deals, fix them up, get a bunch of equity in it and do it again, which is hard.
And your monthly expenses are $2,000.
And do that, yeah. If all you need to make is $2,000 a month to survive, you'll be fine. But it really, to me, and what we teach is going back to basics and getting back to strategy of why are you investing? If you need cash today, if you're investing because you want cash flow, let me tell you, you need money then.
Mm-hmm.
Because I hear that all the time. I want to buy a property that cash flows, but I don't have any money. Well, honey, that's not how it works. You might get a couple $100 a month cash flow, but unless you can live on that or have 100 of these properties, it's going to be tough. So we teach people to look at the long-term strategy, that are you buying these so that someday you can retire and someday you can have passive income coming in, then think 10 years in the future, think 20 years in the future, and imagine what those properties are going to be worth in 10 or 20 years. That's when you become wealthy. It's not an overnight thing. Yep. And you should have a job that, that pays your bills right now. And that's, we're not here to retire by 30. We're here because we have gifts that we're to give to the world and make a difference.
The other thing I just would point out, I think that people need to stop thinking about, like, I buy low, sell high. These are long-term strategies, and let's let inflation do its thing.
Yes.
And let's let the tenant pay this off for you and make sure that there's cash flow, and not, am I buying at the right time? These are right. Because my sister, as you guys, I think I've met her, she had 20 of these, and she was a bookkeeper and never went to college. And she wasn't making great money, but she was slowly just buying these little rentals. And when she retired, she had like 20 of them, but over a long period. And that, she had her issues, property management and tenants and all that kind of stuff, which you do. But after 25 years, she owned a bunch of property.
The tenants paid down for you.
Correct.
And
right?
the values hopefully gone up.
So much more than she paid, and the tenant paid it off, and she owned some free and clear, and she had debt on some. And it's a long game.
And you have to think that way. And the biggest mistake I see people making is not thinking that way and thinking they've got to get that discount or they're not going to buy. When Rich and I first started investing, we really didn't know too much about it. And we just went to Texas and bought a bunch of brand new homes, which is kind of what we do today. And we got like maybe a $5,000 discount. But other investors were like, oh my gosh, you're paying close to retail. What are you thinking? Like, you could never make money that way. But what we knew is that this was in the path of progress. This is where jobs were going. Population growth was there, infrastructure growth, which requires more people to come and build that infrastructure. So we knew that we were buying in the path of progress, that over time those values would go up. Now, 10 years later, those properties, they doubled. Now they've tripled.
Yeah.
It's been 20 years.
Exactly.
Do I care?
No, that's my point.
If you paid $150 and it's worth $450 today, do I care that I didn't get $5,000 more off? So you've got to think long-term, because in this case, these were newer properties that didn't require a lot of work. Had we bought an old property in the Timbuktu in the middle of the Rust Belt that's probably that property might be worth the same as it was 20 years ago, no growth. Well, maybe all you've done is feed that property because things break down and you got to fix it and all your cash flow goes to that. So if you buy in an area where there's not appreciation, 20 years later, you're not going to probably end up wealthy.
Right. And if you're waiting for a crash, it's the same thing. I think the fundamentals are great area and a little bit of cash flow. You just don't want to feed it.
Yeah.
And you can find those deals.
Yep.
You could find those deals.
Just enough to cover it. Yep.
Yeah, I think it's important you guys brought up the get rich quick, right? Like, back in the day, we had all these get rich quick schemes and all, and now I think the generation in the last few years, like the stock market, crypto, real estate, everything really has been get rich quick, right? Like it's doubled, it's went up significantly. Yeah. Right. So, to your point, people are like, well, I don't want to invest in this if it's, if I got to hold it for 20 years and maybe, maybe it doubles in 20 years.
Yeah.
You know what I mean? They don't want that. They want like the quick money. Right. And I'm hesitant on that because it's like, okay, if you try to do something like that in crypto or something else, you also could lose money really quickly, too. Like it's not all just win, win, win. So I just, I think you really have to look at your investment strategy because the last 4 years, I don't think you could have had a bad investment. Like if you lost money in the last 4 years, you did something terribly wrong.
Well, you bought at the peak in 2022. That's how.
That's what you did wrong. What I should have said is if you invested in 2019, 2020 and then tried to sell in 2025 and lost money, you did something wrong, right? But I think, what you're saying is so true, especially for the younger people, right? Because they're so used to seeing this, right? If you're in your 20s and you put money in crypto, I mean, you've done great, right? And so is there anything you would add to that you said before on just being careful and having like a long-term vision?
Well, it's just, again, there's a big confusion about investing in real estate versus working in real estate. So it's really easy for someone to know, hey, you're a realtor, you show people homes, they buy, you make money. That's an active business. And so anytime you're actively involved, you're taxed differently and it's not an investment. So flipping homes, that's active. That is not an investment. You're taking your time. But if you are wanting passive income, you're buying assets where you're not physically involved in it. So understanding the difference. Do I want to have a job and a career in real estate or do I want to invest in real estate? Both are fine. You just have to know the difference. And so to answer your question, I think you can get rich quickly. If you quit everything else and you become a flipper, you're going to probably lose money a bunch of times. You're going to make money. But I know plenty of people who are wholesalers, flippers, and they have done very well. It is a full-time job. It is not an investment. It's not passive. Yeah.
Right.
Yeah, absolutely. And if you have to work your other career that you get paid well on, I know at Limitless, we had a girl come up and she was like, I make really good money on my job.
Yeah.
But so I feel like I should quit and be invested, doing more real estate, like wholesaling, but at the same time, I mean, I'm making good money and I'm buying all these deals like passively. And I'm like, keep doing that. Just do that. You can't go wrong with that. Like, it's almost like there's shame now. Like you should not have to work. Like you should be able to retire at 30, 35, and realistically, it's a very small amount of people that can do that. And you'll be very happy if you work hard and at 50, 55, 60, you have plenty of money and don't have to just live off of Social Security.
Yeah. I think the marketing narrative is just wrong for this, this crash and all that, because why wouldn't you buy something and have somebody else pay it off? Like just period, right? Like, you know what I mean? Yeah. That's all this is.
The bank gives you money. Someone else pays that debt off for you. You get all the upside.
Well, you put 30% down on something and somebody else pays it off. It's like,
yeah.
Is that so hard for people to figure out? But you know what I mean? Like,
that's a good point because I bought a townhome for $600,000 2 years ago. It's went down in value like $10,000 or something. But I mean, I get $36,000 a year from it and I've hardly had to put any work into it. So I mean, realistically, to Ken's point, if I'm sitting around on the sidelines waiting for it to go from 600 to 550, I already did that in 2 years.
Well, yours actually has not really moved. But the point is that you're making money on your money.
That's what I mean, though. Like, even if it did, if I'm sitting around waiting for 2 years, I mean, I'm making $36,000 a year. So every year, if that's not dropping more than $36,000, you're not really moving the needle.
I don't even look. I don't know about you guys. I don't even look at the values.
Sometimes I do.
I very rarely.
Beginning before the
Well, it's
purchase.
the very beginning, of course. Yeah, right. But I mean, after that,
Oh, right. Yeah.
I
It's not like
really
checking your
don't. I
stocks.
don't do it. Like
It's selling, so
I
why
like
bother?
if the mailbox money's coming in
Yeah.
and I have a tenant in there, I don't care. I don't
Unless
really
it's
care.
really skewed so
Yeah.
much. Like a property we have on the market right now in Pennsylvania, we paid $220. I think the realtor said it could sell for $380. We're making $1,500 a month or
Yeah.
something. It's like
Yeah.
this isn't the property to sell. Take that
Yeah,
equity.
no.
reinvest.
That's a really good point.
Yeah.
I call that imputed equity, and so you take a look at what your imputed equity is and what you're making on that. And we're actually doing I haven't told you guys this. Well, we're doing a 5-property recap. So what that means is we have 5 properties that we've owned a long time, and we've done a lot of cash out refis on, right? But the equity that's left with the correction that we've had versus the cash flow, we're like, let's take the equity and roll it into something new. So we're doing that right now. And these are properties we've owned a long time. So you got to pay attention to what you're making on the equity that you have. But, if it's low, then of course you just move it into something else.
Yeah.
Right.
Yeah. We've been optimizing our portfolio,
Yeah.
looking at our oldest,
Yeah.
constantly as a repair, like once a quarter or something. It's like, let's get rid of those properties and move them into new properties.
That's exactly what we're doing.
Yeah.
Some of these properties, I've been 80s, 90s, and we're moving them into 2020 and up.
Yeah.
And, because that capital work, that stuff starts to add up. So, so to your point though, but I really don't look at the values. People ask like, I'm like, I have no idea. Until I really am looking at a refinance or a reposition or something like that. But it'll drive you nuts if
it's also great forced savings for people. You know what I mean? So that money can get vaporized, or you can invest in crypto or something and it just goes away. But having that hard asset and just forcing your savings to put it into something.
Yeah. Once a year, I kind of look and check, and that's it.
But you can also probably read the room really well. Like in 2022, when there was such a frenzy and people were offering $100 million more for an apartment than it was worth, then you might check and be like,
yeah. Well, the challenge you have is, because we went through that, is then what are you trading into?
Right.
Like so while the market's up, that the exit's good. Then you got a capital gain problem and a tax problem. You got a return of equity, to your investors problem, and then you got to find something to replace it. And what's that like? Because you're actually, you're buying at the same market, generally. So that's the other issue,
Yeah.
I guess it's not really up for us a buy high, sell, a buy low, sell high, because if you sell high, you're going to buy high, right? And I'm like, I don't want to do that. I'd rather just keep where I am, even though, that is a part of the strategy we have over the years, but sometimes we've just gone into other markets.
Does it ever make sense to just not to just sell it and pay the capital gain and keep the cash?
We've looked at that, so that's what the opportunity zones, potentially. We're doing. I'm doing billboards, so so we're looking at bonus depreciation. I can exit out of apartments, let's say, and come into this bonus depreciation and wipe that out. So it is a tax issue. We've looked, and then what though?
Then what though? Then you.
Hey, Ken doesn't like to pay tax.
Yeah. I know. Well, when we were on that hike in Coeur d'Alene, you were talking about optimizing your portfolio.
Yeah.
Or looking at the least performing 30%.
Yeah.
So how'd you do that? And how'd you operate with that one?
So same kind of thing that you were just talking about. We had we were struggling with occupancy and cash flow. This is a while back, but and we had good equity, so we're like, okay, it's not really cash flowing a lot. Let's move that money, right? So the idea is always to 1031 if you can. So what we do, what we're on this 5-property recap, we bring it all to the tax accountant first. And say, what's our capital gain issue if we sell at these prices? That's when we start to get the numbers. Then we cut a deal with a big group out of California to come in and be our partner to take us out at those prices. And one of the 5, we determined we weren't going to 1031 because that one particularly had a way to minimize our tax. So there's 4 that we're doing a 1031 on, 1 that we're taking the cash out. But that was all, completely strategic based on what we were told by our CPA before even put it in our contract.
Right? Yeah, the tax side of things.
So the tax side is, can wipe out 30-40%. If you've had it a while and you've got that reoccurring, depreciation, recapture, and all the capital gain, and there's a lot.
The biggest mistake people make is not checking with an accountant before buying or selling.
Yeah. But it's a good point. Are you stuck the long term, right? That's a good question. Because you can get stuck, right?
Yeah.
You don't want to be holding that. You have to pay 30-40%. So, well, thank you guys so much for coming on. And where can people reach you?
realwealth.com, and also my podcast, The Real Wealth Show. And then Rich's book, Wise Investor.
Yes, let's talk about that. Let's go. Jeez, we forgot about that one. Let's talk about Wise Investor. How's that going?
It's going really well. Yeah, I love this new shift into how we're marketing on Amazon, and it's just
we're cutting some cool deals.
Yeah,
all over.
So it's still cranking, and just my favorite thing is the feedback from readers. Just it's like the life-changing stuff, and then that they shared it with their kids, and it's getting passed and shared.
If you guys are interested in that, just go to wiseinvestorbook.com
or realwealth.com.
Or realwealth.com. You can pick up that book. It's an excellent book.
Thanks.
Thanks, guys.
Thank
Thanks
you
for having us.